Again, the beta on the Chinese side is always a little bit higher. Their economy probably is in a little bit tougher shape too right now. So absolutely, they'll get impacted more to the extent that this continues.
So let's say there's no deal, which is a reasonable thing to posit at this time. You think the U.S. markets fall any further? Do you think that the Chinese markets fall quite a lot?
So if there is no deal, I mean, there probably is quite a bit of downside on both sides. Both economies, both markets really need this deal from a political standpoint and from an economic standpoint. That being said, again, China would be the relative loser, but that's also why we think emerging market equities are probably the right way to play it, because we do think there is a deal.
So let's say, again, just because this is a thought exercise, if there's not, China's, the Shanghai was down 5.5% last night. Do you think it could have a 20% correction?
It wouldn't surprise us. Again, the way that the markets have rallied, the way that they've put so much weight on this trade deal being done, again, we think that to a large extent that is discounted in markets. If there's disappointment, it would not surprise us to see a lot of that roll back, and that would probably be a double-digit decline.
Yeah, and if there's any tougher approach to China, whether it's the sanctions we talked about earlier, export controls, or even just tariffs, it would seem to hurt their economy in the long run and not just right now. If that's the case, what do you think is fair value for Chinese equities?
We would say, again, going back to where you were probably in the fourth quarter when there were some concerns about this deal not getting done would be a pretty safe bet. That being said, we do think the Fed has pivoted. Other central bankers have cut interest rates. So, we don't think we're going back on U.S. equities because, again, there is some economic strength. Those companies are doing really well from an earnings standpoint, but Chinese equities are probably the most vulnerable.
Who else would be the knock-on effect of all of this, Samir? So when we talk about the Chinese market being hit by this, again, all in one hypothetical scenario of there not being a deal and the economy may be suffering some pain from that, who are we talking about? Germany being collateral damage, East Asia? Where would you look next?
So it's a great point, Kelly. So if you look at Germany, if you look at Taiwan, if you look at South Korea, large global exporters, very tied to trade. Also, if you look at U.S. tech shares, those are down quite a bit, especially the semis. So those are probably your most sensitive plays. But if there is a deal, they will also be your biggest beneficiaries.